Time for the market report. It's a WASDE week.
That's right, Mike, and we'll take a look at the report and its implications. But first, the numbers. What were the week's biggest gains and losses? And then this month's WASDE report. What did it say? And finally, Extension row crop economist Dr. Will Maples gives us the inside scoop on what it really told us. So, markets closed on the downswing with row crop split. Let's take a look. The week's biggest gain, lumber, up 10 bucks, near a 2% increase from the previous week. The week's biggest loss, wheat, down nearly 9 cents. That's nearly a 3% decrease from the previous week. So this month's World Agricultural Supply and Demand Estimates report just dropped, and this one was unique in that it was the USDA's first real look into this year's crop estimates. In short, wheat, corn, rice, and cotton acres down, while soybean acres up, while livestock still rebuilding. Here's what it had to say. U.S. wheat supplies forecast lower from last year. Production down 424 million bushels due to less acreage and yield. Domestic use projected down while food use unchanged. Ending stocks projected 18% lower than last year. Season average farm price $6.50 per bushel. Global wheat production also down by nearly 3% compared to last year. Consumption also slightly lower along with trade. Projected ending stocks 275 million tons. U.S. corn crop projected down 6% due to less acreage, yield, and challenging weather. Total corn supplies down 2% to about 18 million bushels. Total use also down 2%, along with exports at 5%. Season average farm price $4.40 per bushel. Global corn production follows the U.S. trend, down about 17 million tons, but still at a record high. However, global consumption expected to rise slightly, and imports too as a result, ending stocks down by 19 million tons. U.S. rice production down 15% from last year due to less acreage, much like wheat and corn. Yield, however, is projected up by 188 pounds per acre. Total supplies down 10%, use also down slightly along with exports. Season average farm price $13.50 per hundredweight. Global rice production projected down 5 million tons while consumption higher by about 4 million tons. Global trade expected to increase by about 3 million tons. Ending stocks projected at about 193 million tons. U.S. soybean crop projected up 173 million bushels from last year due to increased acreage. Along with higher beginning stocks, total supplies 188 million bushels higher than last year. Crush and oil demand also higher. Season average farm price $11.40 per bushel. Global soybean production also up by about 14 million tons, mostly from the Americas. Exports projected to rise nearly 3 million tons, while ending stocks projected to lower slightly. U.S. beef production forecast lower due to less marketings and slaughter. Pork and poultry raised on higher slaughter and hatchery data, respectively. Egg production down slightly as well. Milk production forecast slightly up due to herd growth. Fat basis export forecast higher due to more shipments of cheese and butter. 2026 all milk price forecast $21.25 per hundredweight. U.S. cotton production projected down over 4% from last year due to less acreage. However, export projected up by 300,000 bales. As a result, ending stocks expected 500,000 bales lower. Season average farm price 73 cents per pound. Global cotton production following the U.S. trend, down by 6.6 million bales, which decreases supply by 2%. Trade also lower by 1% and ending stocks down 7%. So now you have the context. What's the real story? What are the real takeaways from this report? Extension row crop economist Dr. Will Maples says a lot of the information on acreage was already known, so the report wasn't that big of a surprise.
So this month, we got the May WASDE, which is really the first look at USDA's estimates for this 2026 crop year that's coming up. It's always one of the bigger WASDE reports we look towards each year. We kind of got neutral on corn in terms of market signals and slightly bearish soybeans and cotton. As we expected, corn production coming down a little bit because of the less acres, helping the ending stock situation a little bit better. Soybeans production's up, but exports is also, they're as of right now saying are going to be better than last year, which was a big story we talked a lot about over the 2025 crop year. So overall, some good news. Average farm price across all three commodities, corn, cotton, soybeans, is projected up this year. So a little bit better price environment heading into 2026 going forward. So a little bit positive news from what we've been talking about here over the last few months. So last year we had that record corn crop. It was a massive corn crop. We had to pull back acres to get supply and demand back towards equilibrium. So we pulled back corn acres because the price wasn't there in the spring to signal to plant corn, more corn versus soybeans. Market was saying planting soybeans, and that's what we've seen farmers respond with. It's really important too on this WASDE though to remember these are very early estimates. The acres estimates they're using are based off the prospective planting survey, which was just a survey of what farmers intended to plant, not what's actually been planted out there. And then on the global side, they do put out global estimates in this report, but their Brazilian estimates for a crop that's not going to be planted until this winter. So it's a good kind of benchmark to get us started for the year, but the audience should keep in mind that these are very, very early estimates. The report really didn't have any surprises outside of wheat, especially that hardwood winter wheat crop in Oklahoma and Kansas is being decimated by drought right now. That crop's looking pretty rough, and we saw that show up in the report. So we did see some pretty good price action up higher around wheat. But currently, reports can just be seen as a good benchmark, kind of place to kind of base going forward off of. But as a producer thinking about marketing, really needs to be tracking what futures are doing, kind of tracking crop progress and using those signals more so right now versus this WASDE report.
And that's it for a deeper look into the markets. Looks like this year's row crop acreage is a bit of a reversal from last year. Soybeans and corn ever changing out as the top row crop in their respective fields. Cotton steadily losing acres, but that makes it an interesting story as prices slowly rising.